Going to spearhead this Fireside Chat, a very interesting chat coming your way. So once again, everyone who's still standing inside the hall, I'm going to request all of you to please very quickly take your seats. And with that, let me also invite our speakers on the stage. We have with us Smita Aggarwal, Global Investments Advisor, Flourish Ventures. And also joining us today, we have with us Sopnendu Mohanty, Chief Fintech Officer, Monetary Authority of Singapore. So ladies and gentlemen, we're going to have a huge round of applause, and please help me welcome on stage Smita Aggarwal and Sopnendu Mohanty. I'd like to invite our speakers on the dais, and thank you very much for joining us this morning. And with that, let me also hand it over to you, Smita.
Good afternoon, good morning. I hope you're all enjoying the stimulating conversations all around. I'm delighted to be here with you today, and we're talking about new technologies and their role in financial services. A famous Nobel Peace Prize winner once said, "Technology is a useful servant, but a dangerous master." Over the last decade, we have all been witness to our social and economic interactions completely being transformed because of technology, and we all know how beneficial that has been for the society. The first phase of technology changes was really about making us do something faster, better, cheaper. The next phase was about doing something that was completely different and new and not possible without technology before. And we've all been witness to how far-reaching that impact has been in our lives. But at the same time, I think we are also grappling with a lot of ills of the technology. The monopolistic viewpoints of big tech, algorithmic biases that add to exclusion, the whole issue around privacy breaches, and so much more that technology has now thrown back at us and that are forming a part of a lot of thorny issues and discussions that we are witnessing. The next phase of technologies promise to address all of these thorny issues and bring about a paradigm shift like never before. Can they? Well, let's dive in. And we have with us today Sopnendu Mohanty, Chief Fintech Officer of Monetary Authority of Singapore. In his role, he has been in the center of policy deliberations, experiments, ecosystem conversations around supporting and encouraging and controlling new technologies that are going to shape financial services of the future. So welcome, Sopnendu. It's such a pleasure to have you with us over here. And let's dive straight in, and let's talk about the big word that everybody is grappling with, Web 3.0. What is so special about Web 3.0, and what way will it really change financial services?
Thanks, Smita, but let me correct the last part. I don't control technology. So again, wonderful to get here. Such a successful event you guys have put together. And back in India, when you have such conversation, it's truly enriching. MS, our governor or MD, a few weeks back, came with a policy speech clarifying some of the discussions around Web 3.0. It was primarily driven by this whole policy stance on cryptocurrencies. And we put a lot of effort to really understand what exactly it means to us as a regulator and also to the financial sector. And out of that long discussion, if we have to think within the sector on the Web 3.0, we got to look at the foundational construct of that whole architecture. I mean, the most simplest way to express this, that in 1.0, we talked about only reading data. Now, on 2.0, we talked about reading and writing data. And 3.0 is about ownership of the data on the same platform. Now, how does it affect financial sector? And perhaps one of the ways to look at is look at the asset itself. And in the recent discussion, we have bucketed the whole space into two big buckets. On the first bucket, we have what you call as non-fungible assets, which is nothing but cash in the current fiat world. And will that take a different shape in this new world of Web 3.0? And in that, the first bucket, you have, I think most popular is the private currencies. And then on top of that, evolving is the CBDCs. And on top of that, the stable coins or currencies backed by fiat assets. And then the fourth one, which is the bank-backed, deposit-backed currencies. Now, that's one asset class within the Web 3.0, because to operate in this new architecture, you need a new form of money. And the new form of money is those four buckets. On the market side, all the asset ownership is also going to change because of this new architecture. So what you call as a fungible assets, on the non-fungible assets, which is the different way of asset ownership of equities, bonds, real estate, or the paintings, and whatever you think as a real economy, those asset ownership will change on the new construct. Now, to trade those assets in this new Web 3.0, you need this new form of money. And our argument is that there is a need today for central bank to think about a new form of money, excluding the private currencies, because that's, to us, that's something which doesn't act like a payment instrument. And how do we get to that new design? So this is where we have kind of landed today on this Web 3.0. Now, underlying that Web 3.0, there's this four key architecture. There's this crypto or the cryptography. There's this ledger. There's this protocol of consensus protocol. And there's the whole distribution construct around that. Now, I think the technology itself is not much of debate there. But it is the biggest debate for a central bank is to how to deal with this new form of money. And that's where a lot of policy stance will start evolving as we move forward.
So that's a really nice articulation that you've done, Sopnendu, of how this new design is coming into play. And the foundation layer, which you didn't use the word, is really the blockchain layer,
yes,
which allows for contracts to be executed, transactions to be done, exchanges of value to happen.
Yes.
We have already seen that blockchain has been the foundation for cryptocurrencies, and we've seen a lot of headwinds,
yes,
both from a market standpoint and regulatory standpoint on cryptocurrencies. But what I hear you say is the cryptocurrencies or the private currencies is just one of the many options. You still have the central bank currency on top of it. You have the stable coins on top of it. But really, I would like you to maybe kind of crystal gaze a little bit around what possible use cases apart from currencies can the blockchain offer? And why is it therefore exciting to invest in it and work on it?
Well, I think that's a good point you made, because many a times when you hear this word blockchain, you naturally tend to think about cryptocurrencies. So it's important for all of us to understand there's a new form of money which is required to transact on a distributed ledger. We are kind of avoid saying blockchain nowadays. We say distributed ledger because that kind of confuses people with cryptocurrencies. And to operate in this distributed ledger, you need what we call as a bearer instrument. So it's token. So a cash is a bearer instrument. If I hold a cash, I'm the owner of that process, of that money. So you need a digital form of that. So this whole architecture, which forces you to operate in a distributed way, in an atomic settlement, and the way I argue this, that today, when I have to buy a house and pay for it, are the two different transactions. The ownership of this new property and the payment process are two different transactions. In this new world, it will be a single transaction. It's called atomic settlement. Both the asset ownership and the transfer of value happens instantly because it's part of the token construct. And that runs on this network, which is distributed. I think the only question in that network is the governance process. And I think what has happened as over last few years, the so-called protocols, which was highly ineffective, has now made a change because recently Ethereum made a shift to proof of stake. So I think this shift of the protocol layer, how to validate the transaction, will be a key differentiator of this infrastructure as we move forward. I think cryptography, nobody questions.
Right. That's providing the secure layer for.
So that nobody, I think that's, and the smart contracts we do understand because you want to automate these processes, the smart contracts has to run on this network. Is really the protocol, the validation protocol has been on the center of the question. I think, and if you get that right, I think this whole new design will take a clear shape. But from a, so let me come back to the intent of your question, that we should not associate private currencies into this network. That's a form of money which is used today to transact on this network. In absence of anything, it has created a speculative behavior. But if central banks do come and banks do come strongly on this new form of money, I think that will perhaps, market forces will take it out.
I think that's a really important distinction that we are making. So there are many elements that are highly useful and very innovative. You referred to tokenization, which effectively converts every asset into a digital asset, which can then move across the system.
Including the ownership and the value.
Including the ownership and the value. So that's that whole element of tokenization that you talked about. You talked about smart contracts. You talked about a new form of money. And coming to new form of, and the, coming to the new form of money, central banked backed digital currency, the CBDC. Some of the countries have already launched it. Many more have announced their intent to launch, including India and Singapore. But bringing it down to basics, both countries, India and Singapore, we've seen massive adoption of real-time digital payments. So with that already established and done, what will CBDC add further?
Sure.
And how will the life of a common person change because of CBDC?
So let me go back to the current payment system construct. Singapore and Thailand connected that domestic payment system. So Singapore has the equivalent of UPI called Pay Now. And Thailand has something called PromptPay.
Yeah.
And we attempted to connect these two networks for a cross-border transfer. Domestic market today, using Pay Now like UPI, zero cost, 3 clicks, you move money to a mobile phone number. Same happens for Thailand. We started thinking of connecting these two networks. It took us 3 years to connect because there's a policy misalignment, all this thing, but we got it there. Now we are planning to connect to India by end of this year and also in Malaysia as part of our rollout. Now, the real impact on this whole connectivity, and they'll come to the CBDC question. So before this connection with Thailand, for every $100 a migrant worker will send back home in Thailand, it will cost something between $15 to $10 of fees. After the connection, it was brought down to $3, 3%. So significant drop on the cost of transfer. The question we're asking now, why is it still $3? Can it be less than $1? A sub-dollar fees for a cross-border transfer. Perhaps the answer there is the wholesale CBDC, because wholesale CBDC allows to make your settlement and process between two jurisdictions far more efficient. And that's where central bank can issue a wholesale CBDC, and the market can be far more efficient than what we have today, a 4-tier structure between two corresponding banks in between. So wholesale CBDC will play that role in reducing the cost of transfer. And as an outcome of that connectivity we saw in Singapore, today a Thai worker actually sends money 4 times in a month, as against earlier they used to hold enough money to send back home, so it's cost effective. So in my sense, that wholesale CBDC will solve that problem. Cross-border settlement and reconciliation challenges, both from a regulatory processes and also compliance requirement. The other argument for the retail CBDC is where I think a lot of central banks have stayed away. They're kind of not sure. Because the question we ask ourselves, and I'm sure true for India, that you have a highly efficient payment system, same as Singapore. If I'm able to move money with zero
In
cost.
real time, with
and
zero
real
cost.
time, why do I need a retail CBDC? So that leads us to have a much deeper understanding of this whole new form of money. And there's one argument being made that instead of calling it retail CBDC, can we call it as a programmable money issued by the central bank? And that programmable money can program this particular money for a particular purpose, especially in direct benefit transfer. If you are issuing these currencies from central bank liability for an emergency or for an
Or
emergency
like the way the COVID grants,
COVID grants,
support was
and you can program the money for a particular purpose. With that money, you cannot buy alcohol or whatever you don't want them to do with that. So if there's an opportunity for the central bank in certain unique conditions to issue a programmable money, there's the argument for retail CBDC. Now, retail CBDC has also other interesting advantage. You don't need an account-based system. You don't need a UPI rail to move money. It's super efficient if it's done. In fact, the cost of that payment system on a retail CBDC will be far more efficient than what you have today in any market, because just a bearer cash sitting on your phone and transferring from phone to phone, and you don't have any systems in between. China has done it. They're still on the experimentation in terms of rollout. I think this is a space we've got to watch out for, especially for low-value transfers. This can further reduce the cost of infrastructure of moving money. So still long way to go. Central banks are going to focus on very specific use cases for retail CBDC. Within that retail CBDC, we also have a policy questions, both from an instrumentation of the money, how to design the right programmable money, both on the distribution of the money. Who will distribute? Banks should distribute. I'm sure central bank don't want to be the distribution agent for this money. How banks will distribute, what is the economic model behind it? Also from the ownership. If I'm holding the currency, am I being monitored? The whole
yes,
set
anonymity is a big issue that is being debated.
Privacy, anonymity are other consideration of that whole design of the money. So Singapore has started something called Project Orchid. We are going to release a kind of a experimental platform where you can design a retail CBDC based on the policy design you want it be part of that whole new form of money design. So between instrumentation, distribution, and the
end use.
yes, we can design a particular money. So there's a long way to go, but I think people have figured out a way to think about retail CBDC. But I also bring back to the original argument. You need a new form of money to transact in Web 3.0. And that is a bearer instrument. It's not an account-based system. So whether it's retail CBDC, whether it's a stable coin, whether it is a bank-backed digital currency, you need some form of money to deal with this new marketplace where the asset transfers are not in a traditional design.
So what I think what you're referring to is a new form of money that will lead to massive disintermediation. And for just another use case from what you just described in terms of cross-border, if you are a customer from India having a UPI app, be it Bheem, be it Google Pay, be it any of your bank apps, and if you're traveling to Singapore, Thailand, Malaysia, anywhere, you can actually continue to use your local UPI app to make payments there. That is the connectivity that you're talking about. In today's world, there are private networks that allow that cross-border transactions to happen at a significant cost. But with this central bank to central bank connectivity, you can actually do those cross-border transactions in a very seamless and a frictionless manner. And the next thing you talked about on the retail CBDC is really the concept of programmable money, where you are kind of managing the end use with specific purpose. Otherwise, there is monetary policy interventions that the central bank has to rely on through multiple stages.
Yes. Yeah, definitely. This improves the whole direct benefit transfer process to one layer or further downstream and make it more efficient. So that's will be the argument for this. But again, my big argument remains, you need a new form of money. And it has to be a legal tender. As a central bank, we do not encourage private currency. It is speculative. There's no real value to this whole form of money which is issued by private parties. So there's no argument today which holds against or holds for these currencies.
I think that point is well taken. And as we talk about the next stage, we are talking about distributed ledger. That's
Yes.
the concept that we are referring to. And that leads to decentralized finance. That leads to decentralized autonomous organizations that have what we call the concept of participative governance, this
Yes.
kind of self-governance. So in that world, as we move, what do you see and how do you see the role of financial regulators evolving?
Okay, well, that's a very complex problem to solve for. From my own experience in this whole space is through our project called Project Guardian, which we launched a few months back. And we are targeting capital market as the first use case for a decentralized organization. And there are 3 or 4 things we're looking at. Can we make the intermediaries less in this whole process? Can we create a far more efficient automated market pool for liquidity? Today, liquidity is a problem in this whole centralized finance construct. Can we reduce fraud and scam risk because institutions can get compromised in this whole process? So the residual question in that whole architecture, who is the regulator, who is the governance? And there is this thought, I would say, and it's not a definitive thought here, that while the process is decentralized, the efficiency from the network can be achieved by this distributed business process. Is there an argument for a centralized governance or a super node governance within that node? Some of the node have an unique power to govern this system. And it's still evolving. There are a lot of argument against that because you don't want governance to be the back to square one on this whole process. But there are also a thinking coming around, maybe a central bank will issue a special set of code which will self-monitor these transactions. But this is still work in progress. But till now, I don't think any central bank, through their existing experiment, have come to a place where they're comfortable with this idea of decentralized, self-governed processes. Why it has taken a lot of attention? Because today, most of the DAO are backed by privately issued currencies. So it's still speculative largely, but to have a serious discussion around that, we got to fix some foundational problem, which is get the right form of money, get the right use cases, get the right governance model to run this, even if decentralized, these processes, and also pick up the right use case. Not every use case requires you to run through a DAO architecture. So this is still work in progress. Hopefully, in a year's time, we'll have far more clear explanation on this process.
Right. Moving on, the theme of this conference is global, inclusive, and green. So let's touch upon the intersection of technology and sustainability. ESG fintech, it's a new concept. There is a lot of conversations happening around green finance. I am aware that MAS is actually pushing this through. You have a project Greenprint. So share with us what is that about and how is that going to be impactful?
Good. I mean, as I was coming to your festival, and thanks to your diligent security guard who didn't allow me to enter to the speaker's lounge, I took an opportunity to go and look around your booths. And I was walking around this booth and made those payment company. Privately, they were not sure whether they're going to make money out of it. And I think we have now an answer to that. In my sense is, between payment fintech, wealth tech, and reg tech are going to play a key role in the whole ESG fintech going forward. Because the payment company have transaction data which we can use to monitor all the ESG KPIs we're looking for. The wealth tech has all the necessary tools to advise client on the reallocation of asset to the green finance or ESG assets. And the reg tech will have all the necessary tools to do the disclosure and the registration, all these things. So between these 3 subclasses of fintech, we'll finally found an opportunity to make a lot of money going forward. So the good news to all payment fintech players in this crowd, that one way to pivot and make money out of your existing infrastructure is to pivot to green ESG fintech. Now, back to Project Greenprint, because for us to manage this whole architecture going forward, we need a public good which will do 3 things. How do we monitor all the asset which is being deployed under the ESG framework in terms of their impact on our planet, is all the 2050 goals. How do you measure the impact? Because once somebody borrows against the ESG finance construct, you got to report this data, right? So you have to monitor and measure the impact. And the fourth pillar is the marketplace, because unlike finance till now, green finance or ESG finance has one structural challenge, because you are financing real economy, and this real economy needs to buy solutions which will allow them to become more ESG friendly or more green friendly, or do the social responsibility, better governance. Now, to do that, you need a lot of tech on the real sector itself. For example, a plantation in Indonesia needs to have access to tools which will help them to reduce their carbon footprint. Now, all this requires financing. So the marketplace allows you to discover for every sector a right tech which will solve the carbon footprint issues. And then we have the finance which is backing up them. Then we'll have fintechs in between, will help us to
monitor and track.
Yeah. And that's how we bring the whole ecosystem together. So just to summarize, good luck to all the fintechs who are in the space of payment. Finally, we found a way to make money.
You know, whatever gets tracked gets done, whatever is, you know, so I
Yes.
think that's the whole idea. And
Yes.
people who are sitting with lots of data can play a very important
Huge
role in tracking the carbon footprint.
And every bank, every institution are going to rely on this fintech. And I've been a big advocate of payment fintechs here. And I'm telling every market I go, please work with your respective countries' payment fintechs and find a path to use them in this whole transition from a brown to a green economy.
You know, we all know that Asia is home to 60% of the world's population. According to the most recent World Bank estimates, developing Asia is going to be at the forefront of economic growth with the highest growth rate, including in India. All of these new technologies that we've just talked about and this future of financial services that we referred to, how is this actually going to help low and middle income countries in Asia to finally reach their goals of financial inclusion, more importantly, financial health for all their citizens? That is, is all of this path leading to that, or is it going to be still something that's going to be working for the select elite few?
Sure. Well, Smita, one thing I've always expressed frustration that when fintech came in, there was a lot of optimism that they will finally solve the inclusion problem. But I think they have done definitely a huge impact on the payment side, on the lending side. But you go across the market, still 50% of the population have no access to credit. All the fintechs and banks are doing are over-lending the same people who borrow. So basically, there's a further concentration risk with the same borrowers. And the spreads are quite high there. So it's really still a long way to go. During the COVID, you look at all the ASEAN market, central banks have issued close to 20 plus digital bank licenses. And one of the reasons behind this is that there is still a frustration that this issue has not been solved for. And at least the central banks are trying to see whether they can create a new licensing framework where you can have far more comprehensive banking services rather than this madness in dumping payment and lending to this emerging market, especially the low-income segment. What I mean here is that can this digital bank offer a truly a comprehensive full set of banking services, from micro savings to payment services to micro wealth, micro pension, micro insurance? Easier said than done, because for insurance you need an underwriter who can price it effectively. You need, for capital market micro wealth, you need a capital market fintech which can fractionalize bonds, equities, so that it is a small ticket size for distribution. So my sense is that this digital bank, which has been issued licenses last 2 years, will finally able to come to the market with a far more comprehensive product set, which will truly address this low-income segment. So that's on the distribution side. On the policy side, we still are struggling on the credit policies decisioning. Today, we're still on this old-fashioned ability to pay credit mechanism. But you know that today when somebody issues credit, there are two things you check: intent to pay, ability to pay. Most of us know that ultimately banks and fintech do lend based on ability to pay. And we also know during default, It is the intent to pay.
That is the biggest reason for the default.
Right? So you have two conflicting construct which is running till now. Now, how do you solve for this gap? I think the way to do it is to start thinking about how to digitize the intent to pay. And this is very interesting, a Web 3.0 construct place. And I've been championing for last few months that can we tokenize social credentials of people, especially low-income segment, to demonstrate a better intent to pay metrics. Now, you don't need a centralized bureau for that. If I'm talking to you and you are a person of interest for my business, I would like to tokenize our interaction. And I can use that token to go to a bank and at least demonstrate that I have a right intent to pay. So having those new change in the infrastructure, especially on the credit side, developing a more expansive alternate intent to pay infrastructure, plus the digital bank offering a wider range of product instead of this madness of only lending and payment, should truly address the real concern of the low-income segment of Asian population.
I think this is really fascinating. It's kind of opening up a whole range of possibilities of bringing
and
down the cost as well as addressing some of the information asymmetries
Yes.
that exist today, which result in lack of credit and lack of financial services
And this
access.
also opens up a huge opportunity for B2B fintechs, especially people who are underwriting this insurance, people who are providing fractionalized wealth product. So this also opens up opportunity, commercial opportunity for fintechs in the B2B space, because you need that back-end services to allow this distribution to be more efficient and more low cost at the front end.
You know, a couple of days ago, you've announced a partnership between Singapore and India on financial innovation. So what is your message to the fintech founders and innovators here in India, and what can Singapore offer them?
Well, that is, I think, the first time where regulators have issued sandbox in every market. And it was very difficult to have a cross-border single sandbox. This is the first time globally two jurisdictions have come together to allow participants to have a single sandbox which is applied to two markets. So there are three-tier structure which we agreed with IFCA, the gift city regulator, where in tier one, both the jurisdiction can refer respective market to be part of the sandbox. On the tier two structure, a single applicant have access to both market for sandbox experiment. On the tier three structure, you can actually bring a third regulator to the process. You have 3 or 4 markets simultaneously experimenting a single product. I think this was a structural gap in the whole sandbox framework. Hopefully we'll solve this through this agreement between India and Singapore. An opportunity for all the founders here. If you want to operate in 2 markets, you want to have access to 2 markets through this infrastructure or framework, most welcome. I'm hoping in next 3 to 4 months at the Singapore FinTech Festival, we'll announce one candidate who will going to operate the sandbox in both markets. So that will help us to think how we can take it forward.
On that note, maybe, do we have time for just 1 or 2 questions? Okay, maybe just a couple of questions if anyone has. Yes, please. Can we get the mic?
Maybe we can get a question right now.
You can just, you know.
We will repeat it for you.
Hi, I'm coming from True Balance, which is also a lending platform actually, and we are based out of Gurgaon actually. So we have been lending for the people who have got the retailers, especially with non-civil users actually, not only for the civil users who have got bureau check and everything. My question to you is, like, we have been using SMS trading and sandbox and other multiple things to resource what kind of a payment he's been doing and what is the credentials for every month he's been doing across. But if you look at the other set of users who are recently coming for the digital lending, which is completed their education, why can't we use their education documents to give more lending so that they can succeed in the more careers actually?
Yes.
And this is because none of the other companies are using, other than the bank, like the education loan, people are ready to give the loan. But to sustain, to do a business, education documents are not being used. So if you can tell us, it would be really helpful.
I think very good point. In fact, the one we're experimenting in Ghana, that if I have, the way we should be able to do it without a national infrastructure, that if I have studied in Singapore University, I can bilaterally get a verifiable credential from the university to my wallet as a token. And that token, I can work with the bank to demonstrate my intent to pay and hence access to credit. Absolutely. Not only education, workshops, conference like this, everything can be tokenized so that it enhances our own ability to demonstrate that we have real intent to pay things in this credit market. Absolutely. And we don't need a national infrastructure to tokenize an educational certificate. Bilaterally, technology is available today. In fact, that's what we're experimenting in Ghana. There's a Temasek-backed company called Affinity, which allows you to bilaterally tokenize credentials and can be anything.
Yes.
Just one last question, please.
Yes. Thank you very much, sir, for your wonderful presentation. My name is Yana Wu, and I'm a Singaporean investor, headquartered in Singapore, investing in India, a wealth tech platform called BooSmart. So you just mentioned about micro wealth, and congratulations, by the way, for this partnership between Singapore and India. I think this is wonderful timing. So talking about micro wealth, the mission of BooSmart is help micro wealth go beyond boundary. So for growing middle class in India, they not only can invest in NSE, BSE, India, but they can also maybe invest in SGX,
Yes.
in IDX, in Indonesia, in Philippines stock exchange. So how do you see this cross-boundary investment opportunity, and how the regulator will respond to that for this more like cooperation between the boundary?
So two things.
Thank you.
Tomorrow the IFSCA chairman, Mr. Ingeti, will be here to speak. Do ask this question that you want to be a part of the sandbox. Do ask the question on the stage so that he says yes to you.
Can I ask?
Yeah. Yes. Yes.
I think we're running we're running
Yeah.
behind time.
So quickly answering your question, yes, we can apply your case to Gift City or to MAS. We're happy to look at the application to see whether that can be done out of the Gift City infrastructure.
Thank you so much, Sopnendu. It has been a real pleasure.